I'd like to talk to you about an individual we'll call Tom. He and his wife lived in New York for many years. She was in the motion picture industry, an executive. He was in the advertising business, very successful. Back around 2005, she accepted a position with a major motion picture company in Los Angeles, so they had to relocate to LA. He gave up his advertising position, and unfortunately for him, was really never able to secure a long-term relationship with any employer after that. What happened was in 2010, they got divorced. Unfortunately for him, he really never had a job, so he relied on his wife's income for all those years. And during that time, his wife was earning 95% of the income. So back in 2010, as I mentioned, Tom got divorced, and unfortunately for him, he had no legal or tax advisors representing him in the course of the divorce. He didn't think of anything of it at the time, and my involvement was really only preparing his tax returns. Well, what happened was, since he never really managed to secure employment after that, he had a bunch of small jobs, didn't pay him much income. As part of the divorce settlement, he had actually received some alimony for a year or two, which he went through, and then he received some of her IRAs. Well, in 2011, 2012, he decided to embark on a new career, obtained an insurance license, selling insurance. Never really had much success in that business. And so in order to live, used up a lot of his IRA accounts. Well, what happened in 2012, when I prepared his tax return, I saw he owed $30,000 to IRS, $7,000 to the state of California, and he virtually had no money to pay the taxes. This is a common occurrence when people with IRAs, they don't realize that it's taxable, even though they spend it like it's money they've always had. So in any event, he managed to scrape up maybe $5,000 for the IRS, and I prepared an installment agreement with him whereby he owed the IRS about $25,000 and the state of California $7,000. Well, what happened was that after about 6 months of time, he's paying $500 a month, which is all he could afford. He calls me up and tells me that the IRS just sent him a bill saying he now owed more money than what he started. I said, well, that's right, because when you file an installment agreement with the IRS, they continue to accrue interest and penalties on the unpaid balance. So I said, well, do you have the money to pay? He said, I've got no money, basically. I don't really have the money to live on what I have. I said, I recommended to him, stop paying. He said, well, the IRS is going to come after me. I said, that's right. When you get a notice of levy from the IRS, which you will get, you give me a call, and then I'll call them up. So several months go by. He gets the notice of levy. I call up the IRS, explain to him the account, and that involves what we call negotiations for CNC, which is currently non-collectible. So I should mention first that there are about 4 alternatives in resolving a tax dispute with the IRS. One was what we originally started with, was the installment agreement, which the IRS is happy to accept if they believe they'll be collecting their money over a period of time from the individual taxpayer. Now, there's always the possibility a taxpayer files bankruptcy. Well, the IRS will suspend all its collection efforts during a bankruptcy. In this particular case, a bankruptcy was not viable for a couple of reasons. Number one, tax debts are normally not dischargeable in bankruptcy. You have to wait usually at least 3 years from the time that there was a filing deadline, in which case he was under the 3 years, so bankruptcy was not an alternative. Another alternative is currently non-collectible status. Now, in order to show the IRS essentially that you've got no financial ability to pay the IRS, you have to prepare a number of different forms. One of them we'll call the 433A form, which is a very detailed account of all your assets, all your income on a monthly basis, and you essentially have to prove to the IRS that you have no money on a monthly basis to make any of the payments to the tax. If you do that, then you'll get a letter from the IRS if they accept your form, and they will tell you you've been assigned a currently non-collectible status, which essentially leaves you alone for 1 year. They'll they'll stop harassing you. They'll stop issuing all the threatening notices of levy. And it normally lasts a year. Sometimes you can get 18 months or 2 years out of it without them bothering you. But eventually you'll have to file another Form 433 to update them if there's been any change in your employment situation. So in this particular case, he had no income, he had no job, and he had very few assets, and it was fairly easy for him to get assigned the CNC. So that worked well for a period of time. Fortunately or unfortunately for him, what happened was he eventually did get a job. It involved being a manager at a gallery in Palm Beach, Florida. So he relocated, and his compensation arrangements was such that he received a salary and commissions based on sales of paintings, etc. Well, after a few months, we had to file another 433A with the IRS, and this time the IRS's eyes light up. They see, all of a sudden he's got some income, so we want some of that. So what was interesting is, and a lot of people don't quite understand, that just because you show the IRS that you have negative cash flow, and we could document every single penny that he spent, whether it was on Burger King or pizzas, and this guy did not live a luxurious lifestyle. He rented an apartment, he leased a car, he had very few expenses, and he generated negative cash flow. Well, unfortunately, the IRS website has their own standards for determining whether or not you have the ability to pay on a monthly basis. And what happened was they determined, according to their own national and local standards, that he had $600 a month of positive cash flow, which they wanted. So what did they do? They garnished his wages for $600 a month, $300 each paycheck. Well, he was negative cash flow before the wage garnishment, and so he was in a worse position after that. So he was extremely unhappy. He continued working there for maybe 9 months, and eventually got so disgusted with it, he didn't like his job, and his financial situation was deteriorating to the point where he was very unhappy, very depressed, which is understandable when you owe the IRS a lot of money. And people who don't owe the IRS money don't understand how much of a drain this can be mentally, physically and mentally on an individual. So what happened was he quit his job and decided to move in with his sister who lived in the Midwest. Well, fortunately or unfortunately for him, that actually turned out to be the best thing. Because once you quit your job, and at that point, the way he was funding his negative cash flow was he was selling off whatever remaining assets he had. He had some private paintings, some jewelry, some cufflinks, he had a car. Pretty much everything was sold. He used that, borrowed money from relatives. When all that was exhausted, he moved in with his sister. Well, at that point, he then became eligible to file for an offer in compromise, which is the method you hear advertised on the radio all the time, frequently disingenuously by the advertisers, because what they don't tell you is that it's not easy to qualify for an offer in compromise. In fact, the IRS website tells you that only about 40% of the offers are accepted. However, tax practitioners who've been involved in this can generally get the acceptance rate up to about 90% because they know exactly what the IRS is looking for. So in this particular case, it was really a classic case. He had no income and no assets. So you would think that he would be immediately accepted or approved for the offer in compromise. So at that point, he owed about $30,000 with accumulated interest and penalties. So I recommended to him that we prepare an offer of $1,000 to settle all his $30,000 of tax disputes. And the way the offer works is that you submit another form, you detail all your assets and income, etc. And if the IRS accepts, you put 20% of your offer down, which is $200, and if they approve it, then you pay the balance of $800 in less than 5 installment payments after they are approved. Well, it took about, that's the end, almost a year before the IRS actually approved it, just to show you the bureaucracy involved in this thing. That it was a classic, should have been a simple case, but they didn't process it right away. It gets transferred from one individual, IRS personnel leave. That's the way these things get delayed. So finally, they approved it. He paid off his $800, and now he has his federal tax lien expunged from the record. So now he actually moved to San Diego, and he's looking for a job, and I think he's going to be successful. But here's a case where start to end, it's probably about 6 or 7 years, and he went through all the different processes. He went through preparing an installment agreement, which he couldn't live with. He went through currently non-collectible status for a period of time, which didn't work once he got employment. He was not eligible for bankruptcy. He considered it, but again, his tax debt was not over 3 years old. And even if it had been over 3 years, under the bankruptcy laws, there are two different types of individual bankruptcies, Chapter 7, Chapter 13. If you're earning too much money, you're not eligible for the straight-out liquidation, which would have meant that he would have had to pay out his tax bills and all his other creditors over a 60-month period. So that didn't work. So basically, his only salvation was the offer in compromise, which was eventually accepted by the IRS. So that was a good outcome. It doesn't always work out that way, but in this particular case, it worked out successfully, and he was very happy. So we wound up settling a $30,000 debt for about $1,000.